Hey there, hope you're well. Today I want to talk about bad Forex trading habits, and this will be a very important lesson, as most of my lessons are anyway, because what separates profitable traders from traders who time and time again keep losing money and they keep thinking they can turn it around and they don't, and they just, like bad gamblers, they end up for many years losing money hand over fist. Probably the biggest difference between them is the habits that they have. So if you form good habits, you'll succeed. If you form bad habits and you never realize that they're bad and you keep repeating them, and sometimes people even know they're bad but they still keep doing them anyway, but if you can't even recognize them, then you're in for a lot of trouble. So let's look at the bad habits, and we'll look at them starting with the next slide. First one is trading without a reason to. What that means is you should probably know by now, or maybe you don't, but trading is a game of logic over emotions. And when you have logic, it means that you've always got a reason to trade. After all, if someone says to you, why did you make a particular trade? You don't just say, well, it was pot luck and I have no idea why I did it. Obviously, that's no way to earn a living. There is, as most people believe, you've got to have a system to make money out of Forex, out of currencies. So when you make a trade, you don't just flip a coin. You don't just invent some reason for your trade. You should normally have a reason to trade. This sounds so obvious, but a lot of people don't. And what they do is they don't have a reason, and they don't even have an opportunity to trade, and they'll just trade because they're bored. For example, let's say that you're one of these people who only trades. Your system says that if the price is within a range like this, right? I'm going to try and show you an example here. This pen. Let's say that you trade, okay, and the price enters this range and it goes like this. But your strategy is to only trade when it breaks out of that range, and you might come in here and buy and go long and see what happens. But let's say that you're trading and all that happens is all day long it just goes like this, and the next day it's still in the range, and the next day it's still in the range. Unfortunately, what a lot of people do is they just end up getting bored, and they just buy or sell or whatever they decide to do, and they end up losing money. It's a bad habit. They ended up trading out of boredom or out of greed because they wanted money. Never do that. Always have a reason to trade, and whatever your logic or whatever your system is, don't abandon your logic. Okay. Another bad habit is being too contrarian or against the trend. Now, look, a lot of big traders have made money by trading against the market, by trading, by having a different viewpoint, and they've profited handsomely from it, especially when a lot of people get it wrong, and they may get an amazing price and may make a lot of money. But what you can't do is you can't trade against other people in order to prove yourself right, because the market is not about justice. It's not about proving you right or proving you wrong, or you may have for example, I'll give you a good example. There is the housing market around the world, and although in some countries the bubble has finally burst and now house prices are going down, actually in a way it was a mistake not to have gotten in earlier. Although it's easy to say, yes, it's a bubble, it's an asset bubble, it's going to explode, and it's wrong to go into the market because the prices are overvalued, and I know I'm right about this. You may be right, but if it takes you 30, 40 years to realize that, depending on different things that happen in the economy, for you to be proven right, you've actually missed the opportunity in many ways, and you could have gotten in earlier. So don't be too contrarian. Sometimes you just got to see, you've got to go with the flow sometimes. Another bad habit is ignoring the fundamentals. So, as you know, there's technical analysis, which is the study of charts and price movements, and there's fundamental analysis, which is based on things like what are happening in the economy, news, different figures coming out, and that sort of thing. You can't ignore the fundamentals, no matter how much of a technical analyst you are, how you think it dominates the market. You got to check the news before you place a trade, because the most dumb thing is to totally rely on your analysis, on your charts, and then something happens in the news, and because you didn't bother checking the news before your trade, you lose a ton of money. Okay, and that won't necessarily be what's the word, reflected in the price. It could. Usually news, especially important news, does affect the price quickly, but always check it before you place a trade, because there could be a little piece of news that comes out a couple of seconds before, but you didn't check it, and you place your trade anyway. And if you just checked it, you would have saved your bacon. So always do basic things like that. Never ignore the fundamentals. Do not risk too much on each trade. This is a very, very common thing. You can actually have the best logic in the world. You can actually be one of the best traders in terms of the decisions you make, the timing of your trades, the being able to hold on to your winners, ditch your losers, good stock management, that kind of thing. But if you put too much on each trade, then what can happen is you can get wiped out on a poor losing run. People consider that risking 5% of your entire, not bankroll, that's the word they use in poker, but using 5% of your entire balance is actually on the high side. So that doesn't seem a lot, 5%, but it is. Because 5% means that you only need 10 losing trades in a row, and you wiped out half your balance already. And that significantly affects the growth of your balance, the growth of your earnings for the future. So don't risk too much. Remember that 5% is actually quite high. Nobody ever wins every single trade. No matter how right you are, no matter how good you are, you can simply get a string of bad luck. That's just the way it is, because there's no guarantees on any trade, no matter how good you are. So don't risk too much on each trade, and practice decent bankroll management is what they call it in poker, but that's not the word they use in Forex. Another one is not using stops. Believe it or not, there are a lot of people who just don't use stops at all. If you don't know what a stop is, it's just where you say, I'm going to enter a trade in at this price, and as the price goes up, I think it's going to go from here up to here. But if it drops down to say 5%, a 5% drop from the price at which I got in, then I made up my mind already at the beginning. I made up my mind to sell out there. Now, a lot of people don't do that. They don't set stops. And a mental stop is not good enough. You've got to set a real stop, use your software and do it. And a lot of people don't even have a stop. They don't even think about a stop. What they do is the price goes against them. It drops way below that point. And they then actually have a kind of greed where instead of stopping the trade, instead of reversing the trade, what they actually do is they end up thinking, oh, the more money I lose, the more money I'm going to pile onto this, so that when I come good again, it's going to make up for the big losses. And that's the worst thing that you can do. It's the total opposite of what you should do. But you should use stops in the first place. You'll never get in that situation. So that is the second part there when I said not pulling out of a trade. If you're in a losing trade, quit early. You can always re-enter the trade later if it does rebound back. Okay, don't think, well, it's going to rebound back, I'll just pile loads more money on. Wait for a confirming signal that the trend is back in the direction that you thought it was going to go in anyway, and it was just a temporary thing. And if it wasn't a temporary thing, you got to admit that you're wrong, and you got out early because you had to stop. So, never be afraid to admit that you got it wrong. And sometimes, you know what? Sometimes you don't get it wrong, but you just can't win every trade, and things don't always work out the way they were supposed to. Even though all the signs, everything lined up, and it looked like that was the way it was going to go. Final bad habit is panicking and aborting your original plan. So again, this is logic over emotions. You've got to stick to the plan, because the only way to test the system is to stick to the logic of the system. As soon as you start getting fear and panicking and changing your mind and doing things that weren't according to your original plan, how can you ever hope to test this system to see if it really works or not? Because you're not testing the system then. What you're doing is you're testing the system plus a bit of your wayward emotions, depending on maybe whether you had an argument with your wife that morning or not, or whether your bank balance was quite low that day, or whether you're in a particularly good mood or something. So that's a tremendously bad habit. Do not do that. Do not abort the original plan. Do not panic. If follow all the usual rules, but do not panic. Logic over emotions, remember that. That's really what all these bad habits boil down to. So that is my presentation today on bad habits. I thoroughly recommend you click in the description box below. You'll see a link there, and that is to my Easy Forex Tips newsletter. And there I will share a lot of things with you, such as how to trade with logic and not emotions, which sounds easy, but it isn't. How to make maximum profits, but without risking much capital at all. Some of my own personal strategies, and generally a very, very solid education. Listen, there are no easy, there is no way to easy, quick, mega profits in no time. Yes, this is the Easy Forex Tip newsletter. I will make your life easier, but what I won't do is guarantee you riches overnight, and nobody can. So beware of scams out there. If you want to get a solid education, if you want to learn how to be a Forex trader, if you want to get a decent newsletter that's going to help you, it's going to help you better you as a developing trader, then please check out below. There's a link down there, link in the description box. Check it out and sign up for my Forex Tips newsletter. You won't regret it. You can unsubscribe at any time. This is not a spamming service or anything. This is a genuine newsletter. There's an unsubscribe link at the bottom of every single email. So if you don't like it, simply unsubscribe. But you will like it. You will get a lot of benefit out of it, I'm telling you. So please check out the newsletter. It's just below. And I will see you next time on the next video tutorial. So sign up and I'll see you soon. Take care.